Alright, so NAS100 market structure breakdown. Okay, so before we commence, just so you understand my framework I use, when it comes to these markets. Okay, so first things first, what I first do is I determine what kind of market type we are in. Okay, and of course, market types, you have ranging market. The market is basically just stale, moving in a balanced range, of course, not descending, not ascending. Okay, and we also have a uptrend. Okay, as you can see, the price is ascending, and then you have a downtrend and price is descending. Okay, and I would always describe, let me just find a way to delete this, describe a great market condition to be trading in is when the market is either uptrending or downtrending. Okay, so if the market is uptrending, I will be looking for buys strictly. Okay, if the market is downtrending, I'll be looking for sells strictly. Let me just see, there we go. And again, whether let's say for instance we show up for New York session, which is the prime time to be taking trades during for NAS100 or US30. If the market is, let's say for instance, if I see the market is trending downwards, I'll be looking for sells. I will be patient. Let's say for instance, once the market opens, I'm not gonna immediately just click a sell trade. Okay, I have to wait for my principles when it comes to entry format. But this video is not going to be about entries. It's just mostly going to be about market structure, which is going to enable us to understand bias, okay, and how to determine bias properly. So for instance, if we take NAS100 now, let me just remove everything here. Okay, and obviously as we go up the higher time frames, we will be able to determine an outlook. Okay, for me, the weekly chart I do not tamper with too much, the daily as well, and then the 4 hours where I basically spend most of my time. Okay, and 1 hour I would consider it a intraday time frame, so I wouldn't really base it upon bias, maybe short-term bias. Okay, there is definitely traders that enable themselves in the 1 hour and take trades, but for me, I would like to sort of say that obviously the higher the time frame, the more weight it holds. So the 4 hour for me is more so short term, taking a trade during the current session and not sort of holding a trade for weeks and months, because that's not the goal, right? The goal is to really determine bias for the specific day using a medium based time frame, which is basically the 4 hour, and not the extreme like a daily, weekly. So I'm going to use the 4 hour to sort of show you how I would sort of draw market structure in a technical format, and then we can take it from there. Okay, so like I said at the beginning, basic framework, what is the market doing? Is it uptrending, downtrending, or is it in a ranging market? Now, okay, for a ranging market, okay, the only two tools we really need is a support and resistance. Okay, and we can easily just draw a line like this. Okay, and then we can sort of see here that we have two touch points off of this area. Okay, doesn't really have to be an exact price, it can even be just a range, something like that. As price enters this range of price between 25 to 65, 25 1 to 1, we can expect prices to roll over to the downside. Okay, just like this, and it's a bad tool. Okay, and then something like this. All right, as we can clearly see, prices push down, and then once price moves up again, taps here, we can expect it to move down. Okay, and then of course we can entangle that with the bottom half, which is basically this area over here. You can maybe see here, can actually go further back and we can see pretty good price range. Every time the market had come there, we can obviously see repulsion to the upside. Okay, very basic support resistance, nothing too crazy, right? Now this is all prime principles of a ranging market, because it's just, you know, bottom and top. Okay, and again, I do not trade a condition like this. For me, I need the market to trend. But now, would I describe this current market as a trending market based on the analysis I just showed you now? No. If we're looking at it this way, okay, if we're looking at it from a very big perspective, you know, something like this seems like a pretty good ranging market. Okay, but once we start zooming in, okay, and we look at just price action from here to here, okay, we can clearly see that the highest point is of course here, and the lowest point of this amount of candlesticks is here. So from here to here, we can clearly see that price was descending. But how did it descend? Did it just go push down, or how did it look? Here we can clearly see the market had created some format of downward momentum. Okay, a series of lower highs and lower lows, which is of course the basic description of a downtrend. Here we see lower highs, okay, and lower lows. Now, this is something I like to work with, okay? Zooming a little bit more inside, just to sort of see a short-term based 4-hour candlestick pattern, okay? And here we can clearly see a downward push. So during this time, I'll obviously only be looking for sells. And even at the current price, I will still be looking for sells. I'm going to show you, let me show you some setup examples during this moment in time, okay? Now, when it comes to placing trades, right? So let's say, for instance, we determine a downward trend or upward, doesn't matter, but for this example, we're going to be using the downward example. When do I look for a trade exactly? Okay, so the time I look for a trade is basically when we are trending, before I actually wait for price to continue the underlying trend, right? Because again, let's say price is here, before I expect price to continue pushing, okay, I first wait for price to push up and fetch one of these highs, okay, either this one, or even both, okay, and after that I will then look to take a trade within the bounds of this push to the downside. That's when I look to get involved, okay? Very simple. So as price is trending like this, you know, leaving all these highs available, we would obviously describe them as throws of liquidity. I will not be looking to take a trade yet. I'll first wait for at least one of them for the market to push up and grab the high for the price to then continue the underlying trend. Okay, so let's look at this market over here and see when this exactly happened. So from this point on, we can see market started creating these higher highs and lower highs and lower lows, and here and here and here. And then at this point, the market had created a low, pushed up, grabbed this high, okay, as we can clearly see here, grabbed this high. As soon as that happened, we can then combine this with a SMC concept like fair value gap, order block, any type of price holder. So for instance, as soon as price pushes up, grabs liquidity, or for this instance a lower high, we can then look for order blocks to the left that price could easily just tap and then find a place of reversal. Okay, because we're going to be taking a trade based off of a reversal. All right, so here I can already see a order block. So here the market had broke structure, sell, and then we do have a 4-hour order block resting right over here. All right, now you are not only limited to this 4-hour order block. As you can clearly see, this is a good, we could use this as a good reason why price had reversed from this point. But we can, go to lower time frames, and we can easily see on the 1 hour here was a fair value gap. All right, there you can clearly see market filled the gap and then reversed. Okay, and then there can be many formats of SMC concepts that will be within this market that could give you reason of reversal. All right, but a good I would say the reason for me to look for a sell in this moment in time would be timing, because I'll only be taking a trade during the New York session. As you can see, if I enable this market will probably be within the blue shaded area. There we go. This actually happened exactly on the New York Open, and this New York Open obviously happens at 3:30 for me. I think it's 9:30 EST, okay, which is the morning in the US. And then as the market open, first wait for the market open. Here we can clearly see the high was grabbed on the 4. Wait for the open, market pushes up, taps the fair value gap or the 4-hour order block. Okay, doesn't really matter, we can just draw both. Okay, go to a lower time frame, doesn't really matter, because remember there's thousands of entry methods. Again, entries are all personal preference, but as long as we got those main components out the way, like I said, timing, and then of course the market structure, which is now throw on liquidity, higher, lower highs, lower lows. Okay, and then price taps within the reversal point. Here we can clearly see, I'll just give a small little basic entry format. Here we can even use support resistance. We can draw a long support, obviously a consistent support across this market. Let me just see if I can find a few touch points. Okay, so something like this, again, I don't know how trendline traders use trend lines, but I'll just use this basic format here. Here we can see a consistent trend line, which is here. We can clearly see this first one had many touch points. Okay, as soon as the market broke that one, that's the first break. All right, the market refused it. Now again, one trend line would always be considered weak. Okay, so you always want to draw maybe a few more. Okay, maybe here we can see another consistent one. The market broke that one as well with this candle, and then we can also use a more basic one, a normal support, something like this, that's also very consistent. Touch point 1, 2, 3, market broke it, and of course wait for the open. Right, market opens, boom, pushes past the second one, pushes past this last one here. Maybe we can find entries somewhere here, okay, for a more confirmed entry. Or if you're a candlestick trader, you look at candlestick patterns like an easily engulfing candle right here, take the trade, stops above the high, and then of course you can aim for that ultimate low of that 4-hour. Of course this was the low that pushed up, took the liquidity, tapped the order block, so we can aim for that ultimate low for a 1 to 4 hour trade. Okay, and then I do know there are traders that also do use the 1 minute, so a more defined entry would also work, maybe here somewhere. Engulfing candle right here, maybe something very tight, as we can see. 1 minute order block was holding pretty strong. Maybe you can just make your stop loss a little bit more tighter, then you'll have a much higher RR 1 to 9. Okay, but yeah, that is a basic example of using market structure. It's the way I just explained on NAS100. Yeah, let me know how it goes.